If you guys like how I do my chart analysis on YouTube and you want to learn how to do it yourself, click the link below to check out the Vee Trades technical analysis course. What's up traders, this is Vee Trades and today I'll be doing a technical analysis breakdown for LOGITECH International with the ticker symbol LOGI. This was a viewer's request and thank you for your donation. If you want a chart analysis guaranteed to be done, please read the description below. Also take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see on the daily chart and finish the video off with the weekly chart. Since August of last year, LOGITECH has been inside of a weak downtrend. So this looks like the downtrend or the channel that's holding prices inside of it. So here's the downtrend channel right now. We've been working inside of it since August or even September of last year. And you can see that we're finally having a first break of it, the first break of the pattern, because we came up short on the bottom side. This is a very weak downtrend. Normally a strong trend or a healthy trend would be 45 degrees. This is almost like a 20 or 30 degree angle, so it's not very strong. So eventually prices were going to get a break sooner than later. So we did finally get the first break of the pattern, but that doesn't mean we're going to start rallying out of here. Usually when we get that, we can go back down to the previous lows. However, there might be uptrend channel holding prices. Let's see if I can find that right now. Let me adjust this a little better. So I don't think there is a uptrend channel holding prices that good. That one fits decent, but not the greatest. So I'm just going to erase it. So what I think is going to happen is some type of pattern like this where we can go up a little bit higher, maybe to completely fill in this gap back here at the 81.14 level. And then once we fill in the gap, we might push up a little bit higher and then finally go back down to the low or even make a new one. So that's the pattern I see playing out. We already did have two legs up. You can see that this was the first leg up. If I move this over, this is the second leg up, and right at the tip of this arrow is at the 78.56 level, and that's pretty much where we start finding resistance and sold off a little bit. So in the grand scheme of things, this is still a downtrend, and it's more advisable to assume that we have not bottomed. It's just a lower probability to be picking bottoms, especially since this yellow channel has not played out yet. You can see that there was this orange channel that was much more aggressive, and this one already has played out because we had a break outside of this orange channel, and then prices went down to make a new low in the form of two legs. So you can see that this was probably the new low right here, but we still went up and we went down in the form of two legs. So this was a two-legged correction downward. So see, that was two perfect measure moves before we bounced from 66.60 before retracing back up. So where do I think prices are going? So we had a spiking channel because this orange channel is very aggressive, and then we had a weaker yellow channel. So this is known as a spiking channel. We're getting a first break of this yellow channel, but I'm still expecting prices to retest the lows because that's just a higher probability when we get a first break of a pattern. And if we do that, we can easily go back down to that $67 level. That's where we had a bounce before. You can see back here in September of 2020, and a bounce recently back here in March 8th of 2022. However, if we don't find some type of support at that $67 level, I can see prices break down to reach the $50 level, the $49 or the $50 level. Because if I zoom in on the chart, you can see that there's a lot of or the lack of any support built into between these two price levels at the $50 level and the 67. You can see there's really not a lot of support being built. It's just a straight up move, so prices can easily come back down the same way as it went up. So there's really not a support, not a lot of orders to work through for the short sellers, so they can easily drop the market very harshly to enter the $49, $50 level and come back to test this previous breakout level, because there was a double top over here. We had a high, prices went down, we went up, and we got rejected from that high again. That's a double top before seeing that major rally, and we did not come back to retest this previous breakout level. So that's what prices can do if it doesn't find some type of support at the $67 level. So the market is pulling back. SPY, Dow Jones, QQQ, all these markets are retracing back pretty far. So those might help other stocks pull back much further also too. So I'm not saying we have bottom. I think it's just a lower probability, and I got to go with what the chart is telling me. So let's go and wrap this up on the weekly chart. So here's the weekly chart, and you can see that before there was a nice uptrend that prices were respecting. The EMA was holding prices up and pointing up. Now we have a nice downtrend working lower. Prices are making lower lows, lower highs, and the EMA is acting as overhead resistance because we have not been above the EMA since July of last year. So there's really no reason to be bullish right now. I think this downtrend can continue lower, back down to the lows at the $66, $67 level, and from there we need to reevaluate what the price action wants to do. If it doesn't find some type of support there, I think we can easily and quickly drop down to the $48, $49 level. And why am I thinking we're going to go lower? It's because if I was trading this, that's what I would be assuming, because the channel is still in play, and I would be just waiting for a short sell signal, an opportunity to go short, and just wait for this pullback to exit or end. Obviously, if I was trading this and the price action turned bullish, meaning we started forming an up channel, then I'll be looking for longs. But as of right now, I'm waiting. I would wait for prices to pull back to a resistance point, which is probably that EMA, right when prices fill in that gap, and then look to enter with the prevailing trend, which is downward, probably back down to retest its previous lows, and that's where I'll take probably my profit. So that's how I would play it. Again, the market is dynamic. This could be the bottom, and we have to reevaluate the price action if it is. As of right now, it doesn't look like it. I'm thinking we're going to go back down to the lows at the $66, $67 level, and if we don't find any support there, we can easily go down to the $49 level. So if you do turn into a bullish uptrend, we need to get back above the EMA and start making higher highs, higher lows. So that's what we want to see for this to be a bottom. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised on what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.